Well, joining us now to discuss all of this, Sylvia Jablonski, Chief Investment Officer and co-founder of Defiance ETFs, and Kevin Simpson, Portfolio Manager of Capital Wealth Planning. Good to have you both. Kevin, I'll kick it off with you. Last time we spoke, you're expecting a pullback about 5 to 7%. You still stand by that?
I sure do, Melissa. We've been talking about this since last October, and I kind of feel like a broken record or the boy who cried wolf. But at some point, the valuations get a little bit lofty. Pullbacks are a normal course of action along the way. And I think sometime after the option expiration for September and into October, it would be very likely to see a 5 to 7% pullback for sure.
You mentioned since last October, Kevin, you could have missed a lot of S&P points between last October and now. And so how do you position your portfolio? So even if you believe in a pullback is happening, which you have for almost a year now, you don't miss out on this upside.
Yeah, well, we've had only a small percent of our portfolio in cash, Melissa, usually around 8 to 10%. So we've been beneficiaries of rising tides lifting all ships. But very specifically right now, I think you can look at industrials, materials, energy stocks. We're buying Dow, Conoco Phillips, and Caterpillar. A lot of companies under the hood have come down, even more so than a 10% correction would be. So Caterpillar specifically is 14% off of its highs. So if we're looking for good values, there's quite a bit out there.
Yeah, so you're looking at cyclical. Sylvia, it looks like you're going for cyclicals as well, but in another category, semiconductors, which some would argue are very expensive here.
They are very expensive, but I think that semiconductors continue to have a great story into the future. So much of the trend towards digitalization depends on semiconductors now. So pretty much the 5G rollout, everything from augmented reality to artificial intelligence to Internet of Things to cloud, all of these things depend on semiconductors. And we have the supply and demand story there now. So I think, the shortage will push prices up in the short term, but the demand will continue to keep prices up high for the longer term. I think semiconductors are just key to the future of technology.
You also like alternative energy, and you're thinking that the infrastructure bill could give that group a boost, Sylvia. So what sort of companies are you specifically looking at?
So the bill is going to lead to billions of dollars of spending in alternative energy, particularly in things like hydrogen. So I think hydrogen-related securities are going to do well. I think it's going to be everything from charging stations to the companies that actually store and help produce. So Plug Power, ITM, Ballard are a few names. Fuel cells are going to be a big investment into the future. So, Bank of America put out a report earlier this year that $11 trillion of investment is going into the space within the next 7 to 10 years. And with all of the world essentially looking to go carbon neutral, I think that there's going to be a big push for hydrogen. So anything sort of related to that is going to be a good opportunity for investors.
Kevin, I can't help to notice that you like Conoco Phillips, and so that's sort of the other side of this alternative energy coin, if you want to look at it that way. Why do you like Conoco Phillips in particular?
Well, we really like it for the dividend, Melissa. There's a company that has a tremendous history of dividend growth. The energy names have come down a little bit. And I'm not disagreeing that at some point we're all going to be driving electric cars or flying cars, but for the foreseeable future, and as we reopen this economy after a third wave of the pandemic, I just think you need to own energy in your portfolio. And if markets stay flat or range bound, we're going to get paid while we wait with some amazing dividends.
Sylvia, what's the backdrop to all of your investments in terms of your market view?
So I'm very bullish on the market. I think that we're going to end the year in the green. There's loads of market liquidity right now. I think that we still have trillions of dollars of savings on the sidelines that have yet to be deployed. There's nowhere else to put your money, essentially, but equities right now. Earnings have justified the high PE valuations. So I'm very bullish going into the end of the year. I do think we'll have some volatility and bumps along the road. We're already seeing it every time we get a new variant, whether it's Delta or Mu, the market pulls back a little bit. But, strong growth going into the end of the year. I think that the jobs numbers will improve as we get sort of more of America vaccinated. And then, looking at the travel, leisure, hotel industry, I think that that's just been absolutely banged up. And I expect that to be one of the leaders going into the end of the year. So bullish for the rest of the year, high quality tech, 5G, alternative energy. And I like the travel, leisure, hotel trade.
All right, Sylvia and Kevin, good to see you both. Thank you.
Thanks, Melissa.